there was one word to describe what Warren Buffett has been up to over the past couple of years, that word would be quiet. If you look at his trading activity over this time, interestingly enough, we can see that he has been very unlike Buffett. He has sold more stocks than he has bought. However, recently, Buffett, in a turn of the tide, has started buying two specific stocks like crazy. Want to know what those two are? Before we continue, hit the like and subscribe button to this channel as they would be very much appreciated. The first stock is an oil company, Occidental Petroleum. This is very important because Buffett has a history of spotting cheap, good quality stocks, and it may be an opportunity for us to buy into it as well, but we need to dig a bit deeper. Thanks to the SEC and the requirements, Buffett disclosed a couple weeks ago that he had bought $4.5 billion worth of Occidental. Then the week after, he disclosed he bought another $1.5 billion. The week after that, he bought 18.1 million shares worth another $1 billion. In total, that's a $7 billion purchase, making up his ninth largest position now in his portfolio. It's a big move that Buffett's been making. He now owns more than 13% of Oxy's outstanding shares, so this is a totally different sentiment to the likes of what we're used to seeing with Buffett over the past couple of years, which is basically doing effectively no buying. So the question is, why has he changed his mind? And why is he buying so big into this particular stock, an oil company of all companies that he could buy? Now, unfortunately, Buffett hasn't come up publicly and explained exactly why he bought the stock, and that's fair enough. He doesn't have to do that, but he did have an off-air discussion with CNBC's Becky Quick. Quick reported that Buffett told her that he started buying on Monday, February the 28th, and bought all that he could. He said he decided the weekend before to start buying after reading a transcript of Oxy's February the 25th earnings conference call. He said, "I read every word," and said, "This is exactly what I would be doing." CEO Vicky Holub is running the company the right way, Buffett told Quick. So there we go. That's a big clue as to the first reason he's buying. There was something in that earnings core transcript which he loved and made him buy so big into Oxy. So what I've been doing over the past half hour or so is going over this transcript, and I've got to say after reading it, it made me want to buy the stock as well. The company has done so well, and for me, I found 5 key reasons why the stock is so attractive right now, especially to an investor like Warren Buffett. The first is increased financial performance. 2021 has been an amazing year numbers-wise for the company, where earnings went from negative $146 million to a positive $1.54 billion. Revenue rose from $5.29 billion to $7.91 billion. Second reason is that the balance sheet has improved a lot. They reduced debt by $6.7 billion and increased common stock equity. Third, they increased their dividend from 0.01% to 0.13% in the transcript. It said they had a goal of having the same dividend yield as the SP 500. Fourth, operational performance improved. Their production for the year averaged 1.167 million BOE barrels per day, so that's 27,000 higher than their initial guidance. And the fifth reason is they increased sustainability. They're one of only a few oil and gas companies with net zero goals, and they've managed to reduce scopes 1 and 2 CO2 equivalent emissions. So you add all of these things together, including the CEO who seems to have values similar to Buffett, like paying off debt, long-term thinking, always focusing on the shareholder, and it doesn't surprise me at all why Warren Buffett has bought big into Oxy. Occidental has been a marvelous stock to own for anyone who got in. Before this year 2021, it was selling for around $25 to $30, and ever since their earnings call on February the 25th, the stock took off, and as of today, it's selling for over $60 a share. Buffett didn't get in early though. He only started buying big after he read the earnings core transcript on February the 25th, so he only got in at a price between $51 and $58, with the weighted average being around the 56 mark. Buffett also has warrants to buy another 84 million shares at an exercise price just under 60 per share, so that means that the regular investor can still get in at a similar price to what Warren Buffett bought at. Even I was surprised why he bought so much Occidental, but I was even more surprised that while I was making this video, Buffett started making new headlines again, making his biggest deal in 6 years. Before we get into the second stock he bought, I want to thank you for watching this far, And as always, please do give us a like and subscribe if you haven't already. Alright, going back. Warren Buffett's Berkshire Hathaway agreed to buy a stock with a deal of $11.6 billion in cash at about $848 a share. Warren Buffett decided to do something he hadn't done in years apart from Occidental. He brought out his checkbook and purchased an insurance company, Allegheny. This is one of the 5 largest acquisitions in Berkshire's history, so if we break that down, that's about a 16% premium to Allegheny's average stock price in the past 30 days. Obviously, since Buffett bought it, the market started to price the shares higher around the price that he paid. Now, this is such a typical Buffett stock to buy. First of all, because of the numbers. Allegheny hauled in more than $12 billion in sales last year and $1.1 billion in net earnings, so that gives it a PE ratio of what he paid of 10.5, which is way cheaper than the market's PE ratio of 25.7. So it's cheap. That's the first thing that Buffett likes. Second is it's an insurance company which Buffett knows all too well. Back in France, he bought his first stake in the insurance business way back in 1967, and he said he has closely observed Allegheny for more than 60 years. Third, Buffett likes the chief executive of Allegheny, Joseph Brandon, who also used to run Berkshire's reinsurance business back from 2001 to 2008, and Buffett said that they both share a philosophy of managing businesses for the long term. And the fourth reason is it also helps Buffett deploy some of that $146.7 billion of cash that he has on him, which he's been waiting so long to buy something with. And I'm sure he's somewhat relieved to pick up both Allegheny and a lot of Occidental as well. So that's what Warren Buffett has been up to. But let's take a look at what other big investors have been doing as well. Charlie Munger, Cathie Wood, and Ray Dalio. Let's start with the oldest and probably the wisest. Mr. Munger has gone very big into one stock, and this is a very controversial investment. Their investment is a Chinese company called Alibaba. In 2021, he bought only one stock, and that was Alibaba in Q1. In Q3, he bought 150,000 shares apiece, and then he doubled down in the last quarter and added an extra 300,000 shares to his portfolio. It's now his third largest position in the entire portfolio, and he came out in a recent interview in 2022 where he was asked why he bought into China. Wasn't that too risky? Essentially, he bought because it's a low-priced company relative to the value of it. Second, let's go to Cathie Wood. She hasn't been doing the best over the past year, but let's see what she's been doing. So there's this website called Cathie's Ark, which basically shows you everything that Cathie is doing over at Ark Invest. She has 6 different ETFs that she manages. We'll check on all of them combined and then see what her biggest buys are. She's actually mainly been selling stocks the likes of Square, Splunk, and Palantir. But the 2 main stocks that she has bought are Shopify and Twilio. So Shopify is the e-commerce platform for online stores. Most of us probably know Shopify. The stock's actually been going down lately, but Cathie bought low around that 780 mark on March the 21st. And then Twilio, which is the communication software for businesses, that's also gone down a whole lot, but Cathie has only bought recently at around $157 a share, so that's down from a price of $409 when everyone was going crazy with tech stocks in 2021. Lastly, Ray Dalio over at his investing firm Bridgewater has been making some interesting adjustments to his portfolio. Dalio has dropped out a lot of his ETF positions and he's moved his money into more individualized stocks. He dropped out of the Vanguard Emerging Markets ETF, the iShares Core Emerging Markets ETF, and the iShares MSCI Markets ETF. Then he bought Procter & Gamble, which was his largest buy, valued at $848 million, PepsiCo at $530 million, Johnson & Johnson at $530 million, as well as Alibaba, same as Charlie Munger, and McDonald's. So that's money out of index funds and into a lot of consumer staple and e-commerce stocks. So there we go, Buffett, Munger, Wood, and Dalio. Kind of the big 4 players in the game right now. They all have a unique strategy of playing the game, but my personal favorite to follow is still Warren Buffett. I do hope you learned a lot about the stocks these investors are purchasing, and I hope you figure out which ones you may be interested in purchasing for yourself as well. Please don't forget to like the video and subscribe to the channel for more content like this. See you in the next video.